All right. Good morning, good evening, good night. Welcome into the Nifty Q Show. I'm interviewing founders, leaders, and builders in the non-fungible token industry as well as Web3. Today, I'm sitting with my good friend Mike Finch from Parada Capital. We'll be discussing how Fed rates, stock prices, and other macro market conditions affect NFTs and Web3, where he's spending his time and money in the current environment, and why the Pirates will never win a World Series. So I don't know where you want to start with that one, Mike. You want to start with the Pirates? How you doing today?
Doing good, man. I'm actually hitting a Cubs game at Wrigley next weekend, and they seem to be in the battle for worst in the conference or whatnot, division, whatever it is in baseball. So we'll see. They lose. Pirates might be for once not the worst in their little conference there. So, but Pirates are gonna Pirates just like the Fed's gonna Fed and Bitcoin's gonna Bitcoin. So we're gonna get to all that.
Well, hopefully we can catch a game together here. Maybe the Red Sox, like you said, were in town in August, so maybe we can catch a game. But we have bigger things to talk about than the Pirates World Series aspirations, which are essentially zero. Like you said, the Fed, the rates got a little bit higher. They hiked it up just a little bit. I definitely want to have this conversation about how TradeFi and how all of these other factors that typically on a day-to-day basis we degens don't really kind of run into. But I want to talk about how all of those factors influence our industry too, man. But we'll get into that. I want to give a quick shout out to the chat. We've been having massive problems with the computer, with the just internet, just anything that can go wrong and will go wrong happened in the past 48 hours. So I'm sorry for not getting content out to you guys this week. I know it's the first time we're putting out content. It's Thursday, but sometimes it happens. So we got a little rugged, but I'm excited to be sitting down with Mike here, man. How are you doing just in general, man? I know you said you're headed to a Wrigley Field game, but in general, like NFTs, crypto stuff, how you hanging in this bear market?
Yeah, yeah, man, it's been good. I mean, there's kind of a lot of talk on other podcasts around what you would call survivorship bias or survivor bias, right? Which I think is what um, is going on a little bit with folks who maybe are doing better this time around, this bear market, versus the one in 2018, 2019, or even the crazy crash we saw in March 2020. So, we lived through the last bear, we lived through March 2020, and while this one was significant, it's been a little bit easier. So myself and a handful of other people are kind of like, well, I'm a little hesitant to say like, we're going back to 30 or 40 or 50K right away, just because generally the stigma is that when you start to feel that way is kind of where the local top sits. But like I said, I've basically been able to kind of survive the chaos that was June. We talked about that a little bit on the last episode we did together, and certainly other details have come out that I'm sure everybody's heard about with Three Arrows Capital and now Celsius fully going through bankruptcy and all this kind of contagion talk. But it seems like sentiment in the space, my sentiment included, has really kind of shifted or at least leveled out. Nobody's screaming for 10 or 12K anymore. If anything, people are screaming for 30, 35K, right?
Mm.
So, we can kind of pump the brakes a little bit on that and talk, where maybe some of the struggle will be as we move into fall, which I think everybody's waiting for. But then can also certainly talk about like, hey, what's hot,
Yeah.
where to kind of stay away from all that fun stuff. But yeah, man, I'm good. I picked up as far as NFTs, picked up another Doodle
Yeah.
yesterday, and then I'm trying to get you in, so we'll see if we can split one here.
You're deep in the doodle game now, and I definitely want to leave this context out there too. Like Mike was definitely, I would say, like a big proponent of like, I guess, traditional crypto and things like this. Like NFTs and DeFi really weren't like on your radar essentially, and then when you do get into, an NFT, for example, you go deep. And this guy is fully in the NFT space now. He is telling me all about like the different rarity traits he's looking at for doodles and stuff like that. So what initially like triggered your interest in NFTs in that time? I know, again, adding a little bit of context, you mentioned that in our previous conversations that you kind of missed the wave on DeFi summer. Did that have any kind of like factor on you kind of getting into NFT, saying I'm not going to miss this one?
Well, shit, man. I mean, I've missed, you know, like at Parada and us personally, even beforehand at ICO Alert, like we've been very fortunate to kind of hang around this industry for 4, 5, 6 years, however long it's been, and do well. But the amount of misses that I've had far outweigh the amount of hits that I've had, and it kind of goes to show you that, like, you know, whatever the next kind of big niche is in crypto, or, you know, maybe you kind of, you know, you thought Doodles was going to be big, or you thought some token was going to be big and you didn't press the buy button, like, that's okay, right? You don't need to FOMO in. There's so many different opportunities. Yeah, I mean, you know, basically all the way to like the very top of DeFi summer, thought DeFi was a scam. Like I was sticking to that. Didn't think it'd get any traction with the industry. Didn't think it'd get any traction with, you know, the broader financial market. And of course that wasn't true. And then NFTs got going, and, you know, largely kind of felt like I was too late again. A bit of bias from that DeFi summer, right? Didn't want to necessarily kind of buy the top on NFTs, and didn't spend the time looking into how that market works, how that, you know, those communities are kind of shaped. And, you know, you showed me on BAYC when you could pick one up at 3 ETH and 9 ETH and 12 ETH, and, you know, we went all the way to 160 ETH floor. So, you know, as far as like major niches go, I've missed pretty much every single one since 2020. I mean, even March 2020, I sold, you know, pretty much all my Bitcoin down at the 5K level, right? So, and here we are, right? So all you got to do is survive. All you got to do is be able to kind of to hang out for that next shot, which is, you know, to me, looking at Doodles and certainly looking at like NFTs as a whole, I guess is a good place to start there, right? Like NFTs, I think, do a very good job of forming a network, forming a community. I think at the base layer, that's in a lot of ways what crypto has done. You see this with other financial products too, like we were talking about with GiftEd yesterday. But Tesla is a great example, right? The hardcore Tesla people, yeah, they own a Tesla, they drive the Tesla, but they see Tesla as much more than a car. They see Tesla as the future. They see Tesla as an operating system. They see Tesla as like a part of their identity. And NFTs are very, very good at doing that. And I think that's part of the reason that profile pictures have taken off as much as they have. You can look at like the Bitcoin community, the ETH community, right? There's always your quote unquote maximalists who, you know, really kind of self-identify as crypto people, right? And I think NFTs combine that with really interesting supply and demand structures, where, you know, you don't have hundreds of millions or billions of tokens that are out there in, you know, be it in like the actual float, the actual tokens that are available on the market, or that are kind of slowly being emitted through some sort of inflation process. So my point is, when somebody looks at, you know, Bored Ape Yacht Club and says, okay, you know, there are 100 of these for sale, and I feel like the market's ticking up now. They got this big game coming out, right? It's a lot easier, I think, to look at that and say, hey, I can see the floor increasing from 85 to 105 with only 25 more sales or 40 more sales, right? All to basically say the supply and demand mechanics are that much more reflexive than just Bitcoin or other tokens, where when the thing starts to move up, and if it continues to move up and finds a trend, it will kind of like reflexively continue to do so, right? It's almost this self-fulfilling prophecy. And, you know, you did get that a bit with DeFi, but all the inflation, the emission around the DeFi tokens really kind of eventually killed it. And, you know, these PFP projects, it's not like you're getting 100 new every week, right? Like there are only 10,000, there are only 5,000, only 1,000, whatever it is. So I think that's, you know, that and really their ability to build community, especially in the blue chips, right? Where people self-identify with them or, you know, use them as their profile picture everywhere. There's a lot of power in that. And I think we're going to continue to see that power, especially as ETH continues to find strength here.
One thing you mentioned there is the fact that NFTs are kind of like this extra leverage on top of whatever's going on, right? If things are going super well, then they're really going well in like the risky assets. But you see the opposite of that now, and you see like a complete dearth in volume, right? Like there's no volume in NFTs when you look at the charts as comparative to even the start of the year. What's going to bring us back to a point where, you know, we can start seeing some good volumes? Because again, we're in that state in that industry that feels super risky, that people are like, I want to see maybe ETH go back to 2K, 3K, and then I'll maybe get back into NFTs. Do you see it that way? Is that how like all of this kind of works in your opinion when it comes to like, you know, kind of going down the rabbit hole of finding yourself in degen land in NFTs?
Yeah, and I think you're exactly right. I mean, I think largely what you're pointing to is what I would call a wealth effect in crypto. One of the things I've been saying and kind of touting for the last few months, even down at these levels, is that this wealth effect has remained super strong. And what that is basically like, if you look at your hardcore Bitcoiners who were able to purchase early, right, anywhere from 2011 to 2016, or even in 2020, right, when we saw it drop, you know, down into 4K, 5K. If you, you know, load the boat at 5K, even here at 20K, you're still up 4X on your money. So what that does is it creates this wealth effect that the crypto world and the crypto economy does a really good job of containing and not necessarily pushing it out, right? So maybe not your Bitcoin maxis, but a lot of people who would be up 4X, or, you know, if it's 60K per Bitcoin, obviously a lot higher, they will take a portion of that Bitcoin and maybe sell it and gamble on NFTs, right? So you know, the more profit you have available there, typically, will kind of extrapolate itself over to other more bleeding edge areas of the market, like DeFi, like NFTs, where you know, maybe somebody takes a chance on this brand new Bored Ape Yacht Club thing, or this brand new Doodle thing, and next thing you know, they get a 10, 20, 50, 100x on this, and that wealth effect continues to grow exponentially, right? Because maybe they buy a Bored Ape for 1 ETH and they sell it for 100 ETH, and they take 50 ETH and convert it back to Bitcoin, right? So now they've been able to increase their Bitcoin, but they still have 50 ETH worth that they're going to take then and buy a Doodle with, and buy an MAYC with, and buy a CloneX, and buy an Azuki, right? So that all, you know, that growth then generally translates into future volume, right? It's largely like a casino in a lot of ways, right? Everybody's trying to, when the markets are hot, when profits are high, they're trying to take that and squeeze a little bit out, typically in an area that has been moving and has been hot, like a DeFi or like an NFTs that like we've seen. So in order for NFTs to get back, you know, I think what we've seen over the last few months is a, you know, kind of a movement from your more far out there, you know, flipper NFT projects that kind of launch and pump and dump towards your more blue chips, like your Yuga stuff, like your Doodles, your CloneX, a lot of these, right? You know, it seems to me that the two main players at this point are Doodles and Yuga, right? Those with like a real ability to cross from one crypto cycle, one crypto market, you know, bear bull cycle to another bear bull cycle. So I think at this point, without any sort of kind of further, you know, maybe if ETH runs to 3K over the next 2 weeks, right, then a lot of this profit's going to come back, and maybe you see some of that volume pick up. But if we continue to kind of slowly chop upwards, or chop up and chop down, and price hangs around 1,500 or 2K, then I think really what it's going to take is kind of new excitement, right? Either in a new project that's doing something fundamentally different with NFTs, not just a new profile picture who's giving out swag, right? But something fundamentally and like mechanically different at the tech level, at the smart contract level, at the, you know, whatever kind of level you want to look at with NFTs there. But I think it would be that, or it would be these projects actually executing. Like, I think other side, based on what we've seen in a lot of those tests, has a really good chance at taking at least a couple thousand folks in the Yuga community and putting them in a game, and then reinforcing that economy, which we can talk about a little bit about, with ApeCoin and with, Coda weapons and skins and
Mm.
Bored Apes and MAYC and different land, right? Like you can kind of see how they could create this like 8,000 or 10,000 or 5,000 person economy and just let it spin and let
Yeah.
it roll. Doodles in the same way, right? They're kind of taking more of a mainstream approach and trying to take the Doodles brand and Doodles merch and some other, yet undisclosed concepts that we should hear about by end of Q3, beginning of Q4 here, and appealing to your non-crypto natives. So I think if either one or both of those can execute, you'll start to see some of those profits come there, and then maybe people take those profits and pitch it out into to maybe more bleeding edge NFT projects.
Okay. I do want to get into the specific projects, the Doodles. I see that you're rocking that Moonbirds merch. I like it. The BAYC, all of that stuff, because I think you have some interesting takes, and you outline your thesis for each project really well, which is something I've appreciated about how you analyze things, going all the way back since we first started in 2016. So I am going to head there, though. I want to go back to when we first got into crypto. But my last question on this kind of like micro environment that we're in, what does Fed's, height rates, or I'm sorry, the hiking rates mean for us in DGen land, right? Like it feels like we're still not decoupled by any means to any of this traditional finance stuff, but what, like in a very, short amount of time, tell us what those rate hikes mean for us.
Sure. Yeah. It's obviously there's a lot there. It's hard to kind of give like an elevator pitch on it, but I think largely and broadly, with the new introduction of more institutional capital into the crypto space, right? Folks like Michael Saylor and your kind of corporate theme, folks like Paul Tudor Jones and your more like hedge fund types. All these people are still like very much actively looking at Bitcoin. They may have sold their positions, right? And some of them sold the top, the middle, whatever, but like these are not entrants kind of like your retail folks who bought Bitcoin at 65 and sold it at 30 and are going to kind of disappear for a few years, maybe never come back. These people all very much exist in the crypto space. I think the majority of them are still interested in it and see the potential in it as a technology and as a speculative instrument. So when that's the case, and when you have from like a dollar notional value standpoint, all of that firepower there, you kind of like awkwardly and unintentionally like are then forced to play their game a little bit. And their game, as it's been since 2008 and even beforehand, has been Fed related, right? Where the Fed with these rate hikes or, more like dovish scenarios where they're cutting rates and printing money, they're controlling the spigot, right? So obviously we saw during 2020, they were printing money like crazy. Where was that money going? It was going to speculative risk assets. Crypto as was the golden goat of inflation hedges and speculative risk assets at the time. So it saw tons and tons of inflows, right? But the same obviously kind of negative flows on the way out. So as the Fed is kind of tightening rates here, it just makes it harder to get access to cash cheaply. So you can think of them like not only just turning off that cash spigot, but also actively trying to pull cash out of the system or trying to convince people, to pull cash out of the system. And one of the ways that happens is people sell their quote unquote like risk assets, equities, crypto, whatnot, into cash, and they pull cash out of the system. And this hopefully helps reduce inflation and all these different things. That's their goal. Historically, when the Fed is raising rates because of inflation, the market in the short term gets crushed, as we've seen. But in the long term, it does tend to outperform. So I think we're kind of like middle of the road there, maybe a little bit further, where in the latest Fed meeting, they did raise rates by 75 basis points again, but their sentiment and their tone was one of basically saying, if inflation ends up peaking and we don't get a 9% plus number on August 12th, when the latest CPI print comes out, they will feel more comfortable reducing the interest rate hike from, say, 75 basis points or 0.75% to 50 basis points, and eventually maybe 25 basis points. And that's even just that signaling from them to say like, hey, we think we're headed in the right direction. We think, the basically that like inflation's going to normalize. It's going to start to get to the targets we want. That's what has spurred this equity in this crypto rally, because everybody's front running and saying, okay, Fed's feeling a little more firm. They're not freaking out. And maybe we get a 10% CPI print on the 12th and everything dumps back down to the bottom of the range again. But that's at least kind of the hope of the market right now.
Okay. We could definitely go down a further rabbit hole with trying to talk about pricing and all these things as it's related to like stocks and what you just talked about, which was the interest rates falling or continuing to rise. So that may be for another discussion. I want to get in a little bit into your intro, folks. We have Mike Finch here from Parada Capital. We go way back, ICO alert days, even before that, of course. But most people don't know that the channel you are on right now, the actual chat, the physical network that we are sitting on here, goes back all the way to those ICO alert days. So just give me a rundown maybe of your time in crypto quickly before you got to ICO alert, and then we can just like flow in to today, and then we can start talking about those projects. But I think there's a really cool story in there, of course, having been intimately tied to it, of your
there's lots of stories. There's lots of stories, right? Everything from like, thinking I had any idea how to trade Bitcoin back in like 2015, 2016 times to, next step after that was kind of expanding my horizons past just Bitcoin and finding Ethereum shortly after the DAO hack happened for them. So, was kind of like fortunate enough to be ignorant enough to jump into ETH at that time, even though it was like, the riskiest time to jump into ETH. Just really kept learning. This was like your 2015, 2016 timeframe. I'd heard about it originally from my younger brother, who was a co-founder at ICO Alert with us. And I think that's kind of really the key, right? Is that you just kind of have to fall in love with crypto and its potential, and you have to really be interested in it in order to kind of continue to progress through these cycles. So that's how I started, right? Like, had a Coinbase account, had just left my job in craft beer and started, quote unquote, day trading Bitcoin, which was basically like, hey, I think it's going to go up, so let me buy some. And oh no, it's going down, let me sell some.
This was sub 1,000 levels kind of too, right? This was like sub 1,000 for Bitcoin.
Yeah, this was like definitely sub 1,000. I mean, there was a period there where it was a couple $100, because I there's still a Reddit post out there of me yelling at Coinbase because I bought this Bitcoin and something happened, and like it took them 7 days for it to get to me, even just on there. Like, that just shows you how bad Coinbase was then versus it is now. They've come a long way. But yeah, I mean, like the most fun memory from that time was I was actually on my honeymoon, right? So I got married without a steady job. Was kind of day trading Bitcoin, learning how all this worked, and managed to buy some like right before some huge pump. So I woke up and like, boom, made a couple $1,000 and was like, oh, this is amazing. Like, I can just do this for the rest of my life. I figured it out, and then proceeded to kind of like lose it all over the next few months, and found ETH and started getting in there. I really, I guess kind of like the first career move before ICO Alert was I was one of the community managers for a project called District 0x, which is an old school OG ETH project who, they still exist. I'm not sure what he's got going on these days, but they, really, really great guys there, helped him with their ICO at the time, and eventually joined my younger brother to start ICO Alert, which, a lot of wild stories at the beginning there. So, and through that whole process, but was basically, for those who don't, go ahead.
No. So basically, and I hope there's not much lag coming through. So two things. One, I had no idea about this community manager role. Were you just like managing the Telegram or the Slack or whatever the heck was going on at the time? I had no idea. And then two, let people know what the ICO was, and if there's any at all possible kind of connections to maybe DeFi or maybe NFTs even. That would be, if you can make any connections there, yeah. But tell me first, District 0x community manager, you were just like in the weeds with the degens?
Yeah, no, for sure.
Oh man, there's a definitely
Yeah,
connection
man,
issue.
pretty much. I don't remember how I heard about District Zero X. I think it was probably on Reddit or something like that. Yeah, definitely some lag here. Um, but yeah, heard about them on Reddit or whatnot back in the day. This was all pre-Discord. It was a Slack mod, all that fun stuff, and just kind of like was I thought District Zero X was going to do well, so we had our own roles there. It was me and two other folks on the community management team, and help them kind of walk through their ICO. And you're basically like somebody who would put out fires. Community manager roles are still great ways to get into the space if you can find one. But that's really what you would do is like someone would have some issue, you would kind of pass it up the pipeline or whatnot, and kind of handle things that way. So it's very it's very tedious and monotonous. It's not like a very like glorified role, but super important and a great way to kind of meet key people in the space and learn a lot. So was doing that, grinding in the trenches of sorts. And then yeah, ICOs, were a very interesting fundraising model for primarily Ethereum based projects to start. So you could come out, with a concept for a business or an application or something like that in the crypto space, primarily on ETH, and look to raise money through what was called an initial coin offering, right? So you would basically raise money with the promise of delivering people a token that was unique to your project. Started out, as things do in crypto, like very pure, very unbastardized, if that's a word, and of course, like anything else with DeFi or NFTs, slowly kind of devolved into like this speculative casino where the roadmaps went from 80 steps towards glory to there's a new website coming, so then the token would pump, and it just kind of became this big like pump and dump scheme surrounded by a lot of bad actors in the space. You were there. We were really strict on how we handled any of our research or listings or anything like that. And I think looking back, that was good. And
Yeah.
you'll see some of that now with NFTs, right? Like the profile pictures, that come out and they get some hype on Twitter and it's pre-reveal and you get a ton of volume. People kind of playing the lotto there, trying to get an ultra rare on some new profile picture, hoping it's the next Doodle or BAYC or whatnot. And then it eventually ends at zero, right? ICOs, most of them happen that way as well.
Okay. I want to test this and see if we're kind of good on connection. Am I coming through all right? Oh my goodness. Come on.
Yeah, you're coming through. There's definitely a lag. It's about like a 3 or 4 second lag.
Yeah, I'm going to see if I can fix this really quick. So we'll pause in the episode. Guys, this is the Nifty Key Show. I'm through, I think, okay on YouTube. So Mike, just sit in there real quick and see if I can fix this issue just for a second. All right.
Yeah.
Am I coming through a little bit better?
So on my screen, you're pretty fuzzy. Let me show you here.
Okay. I think we can run this. So as long as the audio is completely fine, we can just cut that out of the episode. And if you're here on YouTube, just skip forward and do whatever the heck you need to do. Can you hear me good, Mike?
Yeah, I can hear you
Okay.
fine. Is there
Awesome.
a lag still?
No lag at all.
Okay.
No lag at all. So we'll hop back into the conversation, guys. Again, I'm sitting with Mike Finch from Parada Capital. I've been having fucking computer issues for literally the last 48 hours straight. I'm trying to fix it. I will. I promise to get you guys quality here and figure this shit out. So anyways, let's tie in ICO alert. And maybe before we kind of like move on from that, favorite story from ICO alert, because it was a crazy time. It was nuts. I remember us getting sent ETH for like we didn't even know who it was, like all these kind of crazy shit. But anyways,
yeah,
what was your favorite kind of story from that time, that chapter in 2017?
Definitely the what was the one? It started with an S.
Substratum.
There was that Substratum, yes. So believe it or not, back in the day, Substratum was like it was like the ICP, the Internet Computer Protocol project at the time, where it was like, we're gonna reinvent the internet, and you can run a node for the new internet. And at the height of the boom, I guess maybe it was in January 18 or fall 2017, we were literally sitting in the office watching like some C-SPAN hearing about internet privacy regulations, trying to understand how Substratum token price was going to be affected. And it wasn't the absolute top of the market. So I think we got in on the ICO
Personally.
of Substratum at like, yeah, at like a penny or 3 pennies or something like that, and it was up 10x, and the price was at 30 some cents. And we watched that, and we're like, yeah, nothing really here, kind of works with crypto. So I'm just gonna sell. I ended up selling the thing at 30 some cents. Took the 10x. It was a nice hit. Well, like 3 weeks later, it was at $3, and that was just pure pain, because it looked like, oh my God, the price is up so high. These guys must be doing so well. Only to like a year later, have been taking their DAO treasury and shorting ETH at like $80 with it, only to get liquidated and to go out of business. So, lots of metaphors to various projects that were hot in 2020 or 2021 and now basically don't exist. But it's a good lesson on perspective and sentiment, and how kind of like blown out and frothy you can get in the high times, in the same way you can get blown out and scared and fearful in the bad times. So you can kind of maintain that balance a little bit better next time, and sell Substratum at $3 or not sell it at 30 cents, right? Whatever the case may be, you'll obviously be better off. That was a good one.
Yeah, I'm looking over to my left here as I scroll CoinGecko. Substratum is the 2,942 project second project on CoinGecko, down 24% today. It is currently sitting at 0.6 of a penny. No, even less than that. It doesn't even go any lower. The chart doesn't go any lower. I have no idea what happened to Substratum, but you mentioned something earlier in the episode as well, talking about how this bear market feels a little bit less severe than 2018 through 2020. Why?
I think as you go through this more and more, if you're doing it right, you should be able to pick up on what you've done well and what you haven't done well. I think for a lot of people, when Bitcoin touched 18, 19K, that was a spot where maybe they would want to buy, but they didn't have cash available. Maybe they already bought at 30 or 25 or 20, right? So, cash on hand is something that I always preach. I preached it from probably like 35K to 65K all the way up. And the lesson basically goes that like, you always want to have some cash on hand for that chaos, in the same way that with your favorite bags, want to have some of those bags in case of good chaos, right? In case Matic partners with a Disney and actually does something with it, or in case BAYC is the next big thing, and a bunch of celebrities are gonna want it and actually use it as their profile pictures, right? So it's just it's a lesson on extremes. It's a lesson on like making sure that you're adequately prepared for each scenario. So having I started in crypto in a bear market. Fortunately, I didn't know that there were market cycles at the time. I didn't know there was a bear bull. I was just learning, right? Started in a bear, kind of caught the first run up, saw that first run down, caught this run up, saw this run down. So basically been through it twice now. So it's some of that survivorship bias, like I was saying, where I think those who have been through this and maybe have learned it are now positioning themselves a little bit better, are saying, hey, this can't be the bottom because I'm not in a ton of pain yet, right? I'm not selling fucking shoes and shirts online just to pay my rent, right? Or whatever it may be there. So I think that's what happens. And if you look at podcasts with any of the big name OGs like CMS or a lot of your Bitcoin maxis, any of these guys, like Kobe's a good one, right? They always preach just survive, right? So a lot of people didn't. A lot of people got wiped out with money in Anchor or money in Celsius, and all of that is not totally their fault. But if you can survive and you can hang on, you can live another day to kind of swing for the fences there. And typically, if you're spending the time in the market, if you're learning, actually like what the tech does and why it's important, so that you can use that as a filter for the bullshit like Substratum and Internet Computer Protocol, and a lot of these that kind of come out with kitschy marketing or interesting fake narratives. It ends up being a lot easier to kind of see the patterns over time emerge and understand, hey, this is something that could be real. I see a lot of people piling into this versus this is just something who, some group raised a ton of money, but all the VCs are going to just basically instantly dump it, and it doesn't have a real chance to kind of do anything. So I think that's what's going on.
Yeah, you mentioned the 3AC and the Celsius lending scenarios, and I think there might be like some tie-in to the situation that happened in March, I believe, 2019. I know they're not the exact same scenario, but you talk about surviving, right? Like that Black Thursday event was not only personally for you, like really a scenario where like, holy shit, I could potentially get wiped out or what have you. But like that was a scenario that was a little micro event that really sent us, going, plummeting downwards, which was a lot like the Celsius and 3AC situation. So can you tell me a little bit about that micro event? Because I think it's important on the timeline, and you have experience with it. Like what happened that day, and how does it relate to maybe like the 3AC and the Celsius shit we're dealing with now?
Yeah, it's very similar, right? Like it was a giant capitulation event. That week of March 9th, kind of culminating on I think it was that Thursday, Black Thursday. This was 2020, with the big COVID crash. That Thursday, as people called it, Black Thursday, we basically went 45% down in a single day, 50% down even, and it was something that didn't have like hints from the Fed that they were going to tighten rates. The hints that were like strange Twitter videos of China sealing apartment doors that just, no one had ever, especially in the West, had ever kind of really thought was possible or really understood what it meant. So I think it was a bit more difficult then to kind of fully understand what the fallout could be, from a modern day pandemic. So unlike today, where the fear is very much like a recession, people are going to lose their jobs, right? Risk assets are just going to get blown out of the water for the next 3 years. Like, how am I ever going to make money on this again? I'm already down so much. That fear is warranted and is real, and we've seen that over the last few months. But it wasn't the same fear as there's a virus out here killing people, and we don't know how it's going to spread. So, for me, that week, of course, because this is always how it goes. If you ever see me on Twitter and I'm posting like a beach picture, like fucking sell it all. Because as soon as I go on vacation is when the market rips down or rips up. And either way, I'm not positioned. But like Mike somewhere not at home or in the office, like, bet volatility. Go long vol, 100%. So we were in New Orleans, and the lady was pregnant at the time, and we were running around the town having a great time. That week of March 9th, right? So like the COVID fears were there. I think a lot of people were kind of like just beginning to have that fear. So each day kind of steadily increased the stress and the anxiety. I think we dumped from, let's see, the week before or the 2 weeks before, we had dumped from like 10K down to 8K, and everyone was like, okay, we should hold here. And then that week of March 9th, we started dumping further. So Monday was kind of like, oh, maybe I'll buy a little bit here. Like, let's see how the market shakes out. And Tuesday was like, oh my God, the White House is getting ready for a speech kind of thing. Thursday we had the big crash, and by Friday as we were coming home, they were shutting down the schools. So it got really bad, really quick, even quicker than this time. It was really a period of like 5 or 6 days versus 2 or 3 weeks, and that doesn't sound like that much of a difference. Just kind of looking at it that way. But when you see, a majority of your net worth half over a period of 2-3 days, you, as I did, have to kind of make the tough decision to say like, hey, do I want to continue to survive in this market and live another day and dump a bunch of Bitcoin here at 5K in case it does go to 1K or 2K, versus having to go out and get a real job, right? Those were the decisions I had to weigh. Dumped a ton of Bitcoin at 5K in order to kind of like rebalance the books. Obviously, then we saw it rip up, but was able to keep swinging and hit on other things that year and in 2021, and it all kind of worked out. But yeah, it was a crazy time for sure.
Yeah, so you mentioned maybe this time being a little bit more broadcasted, right? Like the 3AC stuff, the Celsius stuff, BlockFi. I wouldn't say they were completely broadcasted, but you had some inklings. It wasn't like this global macro craziness that you saw with the coronavirus. It's crazy. I haven't said the word coronavirus, I feel like, in 6 months, which feels great. But so are we out of the weeds with the Celsius 3AC stuff as it's related to kind of affecting the market as a whole?
It seems to be. Basically those groups are going through bankruptcy proceedings. These are things that take years. Assets are going to be frozen, unfortunately, right? Those are both the folks that deposit them into Celsius, or those, big time, big money investors who gave Three Arrows Capital money. Those assets are not going to move for a long, long time. I think, the next FUD that we're going to see is, assuming we get out of, the CPI print here in a couple weeks, assuming things settle, maybe we continue up closer to 30K on Bitcoin and 2K, 2,500 on ETH. The next FUD is going to be the Mt. Gox Bitcoin. Mt. Gox was an exchange that got hacked back in 2013, I believe it was, 2012, and basically sent Bitcoin from something like $1,200 to $80. And most people at the time thought that was pretty much it. Mt. Gox was, largely the only exchange. I think Coinbase got started in 2014. So Mt. Gox was the place to play, right? Everybody lost their Bitcoin there. Tons and tons of Bitcoin. I want to say it's like hundreds of thousands of Bitcoin that are now finally getting sent back to folks. I don't have all the details on it. Exactly kind of like what portion are they going to get? 30 cents on the dollar, 90 cents on the dollar, right? But that seems to kind of be the next FUD, meaning that I think largely from a press and narrative and kind of sentiment standpoint, the contagion news of sorts has largely filtered itself out. People got blasted all the way from your folks who had just heard about Celsius and put in 10,000 hard-earned dollars or 1,000 hard-earned dollars, only to just basically have it disappear, all the way to like your largest trading desk in the space, Genesis, who lost billions of dollars to Three Arrows Capital, understanding that Three Arrows Capital was largely tied into both Celsius and Luna and UST. So, it's been a crazy time, but I think from a contagion standpoint, we have survived the summer largely. From that standpoint, I think it would be a surprise to most if all of a sudden it came out that like there's, Do Kwon has 50,000 Bitcoin that he's dumping on the market all of a sudden, right? Like it would be unprecedented in that sense.
What are the features that need to be present for somebody like Genesis? This is an absolutely fucking crazy story. If you don't know this situation, tell me what are the features that allows somebody like Genesis Capital to lend that amount of money to anyone. I don't care if they're Jesus Christ, $300 million or whatever they lent to 3AC with no collateral whatsoever. Like, was that just like complete, absolute degeneracy, basically?
It's hard to say. Historically, Genesis is one of the best actors in the borrow and lending space. They're owned by Digital Currency Group, which is owned by Barry Silbert, right? A pretty prominent figure on Twitter. These are like the Bank of America type companies in the crypto space. I mean, these are major players who have been there for a long time, who are absolutely printing money through, or at least were, through GBTC and ETH and all these other structured products. Historically, their sales pitch has been that they run like a net neutral book or a delta neutral book, which means they never have exposure to the market directionally, be it up or down, right? So if they lend a bunch of Bitcoin to somebody and Bitcoin rips by 50%, doesn't affect their book, and vice versa, right? They lend a bunch of Bitcoin to somebody, Bitcoin dumps, doesn't affect their book. Now, folks like this with very, high tech, responsible risk algorithms and risk metrics get blasted in the same way that banks do in 2008, right? Which is kind of the famous quote of like, it's not what you know, or it's not what you don't know that gets you in trouble. It's what you know for sure that just ain't it that ruins you, right? And everybody thought that 3AC was like the top of the top when it came to hedge funds. I mean, they were the best of the best, up there with Polychain, and I mean, even probably more respected than Multicoin, but one of the best, right? Like Suzu was on everything. His podcasts were printing views. You didn't hear as much from Kyle, but you knew he was like very well respected. These guys were hardcore believers. They shield people on the super cycle, effectively, this concept that crypto was not going to have some massive dump that we just saw it have, and that maybe it would go to 40 or 30K, but it would rebound quickly, right? Just like we saw in May of 2021. So that's how these folks get burned. Genesis has a lot of money, and maybe so what I've heard is they lent something like $2.3 billion to Three Arrows Capital, and they had collateral in the neighborhood of about 50% of that. Right now, that probably sits right at the top of the range from risk for them as to what they want to see. Right. In their mind, like I said, they're lending to like a Bank of America. They're lending to somebody who, in no world would these guys be running this like funky Ponzi scheme, right? This funky like Bernie Madoff style hedge fund. Maybe they got a little greedy. You could certainly argue that in hindsight, right? Especially with some of the rumors around kind of what they were doing with GBTC as collateral. Three Arrows Capital was basically buying Bitcoin, sending it to DCG, the parent company of Genesis, in order to convert it into the GBTC share, which at the time was sitting at a premium based on the mechanics of how that GBTC worked. So they could buy Bitcoin at 50K and give it to the GBTC structured product, and now it would be worth 40% more, right? Okay. Now it would be worth 70K. They got in trouble when, Genesis got in trouble, as the rumor kind of goes, if they then allowed Three Arrows Capital to use that now newly printed premium of GBTC as collateral to borrow more, right? So then when the premium went from 40% to the layering, exactly. The layering of leverage is where you get in trouble for a Three Arrows Capital. So when that GBTC premium started to come off swiftly and then eventually went negative, you now run into a scenario with Three Arrows Capital where the collateral that you put up with GBTC is down so tremendously that these folks are going to be asking for a margin call. They're going to be asking for their money back. Or maybe they, who knows, maybe they structured something out so that Three Arrows could kind of continue. All the while, Three Arrows probably is messing with Celsius. They got some money in Anchor and with UST, gotcha. And eventually the wheels came off and everything kind of grinded to a halt. And anybody and everybody in the borrowing and lending space who was a big player was, either slightly affected or, in the case of Genesis, majorly affected. And final point I'll give you on that is that from Genesis, they basically said that they lost so much money on the Three Arrows capital situation that it negated all revenue that the company has ever made, that Genesis has ever made. So they basically took the loss from the Genesis entity and, you know, allowed it to be shouldered by the DCG entity so that Genesis wouldn't effectively go out of business on the books.
Gotcha.
So,
okay.
Yeah.
Well, listen, I want to stop us there. We could definitely like delve into that whole conversation and continue down that road. And I think it's important that we do at least touch these topics. You know, this is the Nifty Q show. We're covering mostly NFTs, but this stuff all is kind of incorporated into each other at this point. So if you're there and you're kind of sitting there and you're wondering like, why do I need to listen to this? It's like, because all of this is interconnected. So please take some time, listen to the words that Mike was talking about. If you also have any questions, please drop them in the comments. If you're listening on audio afterwards, I appreciate you very much. We are on Spotify, Apple Podcast, all that noise as well. So definitely drop those questions if you're in the live chat. But let's get into the juicy stuff, Mike. You are an NFT degen now, just like the rest of us. You've got a lot of projects that you're interested in, primarily Doodles. Parada Capital has taken some investments, early stage investments in the likes of Flow and a couple other pieces there that are, you know, heavy hitters in the NFT space. So tell me what your involvement is, you know, with Parada maybe. Wherever you want to take it. You tell me where you want to go as far as it's related to NFTs, and we can talk.
Yeah, totally. You know, so Parada is a self-funded hedge fund that myself and a partner of mine run. We basically run two buckets of capital. One that is your kind of more liquid trading bucket. You know, if we think Matic is going to go up, then maybe we'll buy it. If we think it's going to go up, then maybe we'll short it. Maybe we think Matic's going to go up and Bitcoin's going to go down, so we'll short Bitcoin and long Matic and kind of run like a spread trade there. We'll collect yield in places. You know, we're doing all sorts of different things on the liquid trading side, a good bit of which is NFT type trading now. So, excuse me, if you kind of look at, I'm still really learning how the NFT market really works, right? Like I think I have a good idea of the mechanics, right? But it's a market that I think is largely determined on flows of dollars, flows of ETH into and out of projects. You can get run over very quickly because of how reflexive and how illiquid NFTs are. So it's very, very difficult to trade, but the reward is obviously much, much higher, right? If you pick up a Bored Ape here at 85 and the floor, or 86, wherever it sits, and the floor is able to hold, and you're able to time that with the launch of the other side game, and now we got the floor at 120, all the while ETH runs from $1,500 to $2,500.
Double up.
You have a absolutely killer trade there, because you're not only are you 50% up or whatever, or 25% up on the NFT trade, but then you're 80% up on the underlying ETH value as well. So NFTs, as I see them, very uniquely work as a leveraged ETH trade. One example I'll give you is on the first dump down, whenever Anchor blew up, before we knew of any of this contagion, ETH was like 1,800 to 2K. That was the first really capitulatory event for NFTs. So at the time, looked like a great buy some ETH there and flip it into an NFT, in this case, an ultra rare, the ice cream on my Twitter profile pic. You're basically buying ETH at a discount, and you're buying the NFT OTC or, via an OpenSea or whatever at a discount as well, right? Obviously, the market continued to dump, but it ended up working out because the NFT value has largely held at or around the price that I paid for it there. So I like to look for your more ultra rare or top tier rares when you can take cash, buy cheap ETH with it, and then also get that NFT capitulation moment as we saw at that time. You haven't really had as much of it. You got a little bit, of it, you know, like on kind of the latest dip, but it's very quick. It's not over a multi-day period. So I like to do that in the same way when you look to sell them, right? Like if you can get a double up on ETH here and a double up on even like the floor price, right? So if you buy a Doodle here for 10 and a half or 11 and the floor runs to 22, all the while ETH runs to 3K, you know, it's a very, very nice trade because you're getting like an exponential growth factor there as far as your returns go. So, you know, that's what we try to do with Parada. We try to do that with like other personal funds as well. And then have been investing a bit too in like your NFT infrastructure plays. So I see like interesting things happening with the rental and kind of like borrow lending market with NFTs. You know, one of the tricky things with Bored Apes is that as that value has continued to go up in both ETH terms and dollar terms, it gets harder and harder for people to buy the NFT. Even at today's value, right, a couple $100,000, it's hard for somebody to kind of get in and get out of that. But if you can, say, borrow the ape and get full exposure to the ape value in some way by borrowing it, or get full exposure to like an airdrop that's coming, and then return it and keep the airdrop, that's very beneficial, right? Because it acts as almost like a call option on the product. You don't have to put up the full 85 ETH. You know, maybe it costs 5 ETH to borrow it, right? But then you get like an MAYC airdrop, and it's instantly 15 ETH. You've now made 10 ETH, right? So this kind of financialization of NFTs that then allows more of your more like traditional trader, investor, speculator types to come into the market, which is then going to boost volumes, which is going to pay NFT projects more, allowing them to kind of build further and do more things, right? It just becomes this kind of self-fulfilling prophecy, all the while the supply mechanics largely stay the same, right? Those really reflexive things that NFTs have, even versus tokens or Bitcoin or anything else, I think is really powerful. So that's why we've hung around in NFTs and see a bright future, especially for the blue chips, like your Doodles, like your Yuga assets.
Yeah, I want to talk a little bit about those blue chips because there's multiple different projects you guys have at least looked into. When you're looking into projects and you mentioned rarity, what are you looking at, like actual rarity when it comes to like the traits? Are you looking at, oh, this looks, aesthetically rare maybe? I don't know how you look at these NFTs when you're looking to buy a Doodles or what have you. What do you kind of look for when you're, I guess, looking within those projects, and then what are those projects that interest you right now?
Yeah, I think, in going through it over the last, I don't know how long it's been since I jumped into NFTs, but like the best way to start in any new niche, be it DeFi or NFTs or anything else, I think is to try to understand what it is that gets people excited. What do others care about, right? Like I might see an NFT project and I'm like, this art is super cool. I really like this. And I might buy some, right? But that doesn't necessarily mean it's a good investment or a good trade just because I like it, right? It becomes a good trade when it's something that's universally liked, right? When it's something that appeals to the broader crypto space, not just me. More kind of broadly, definitely look at actual rarities based on traits. That seems to be something that resonates with people. I think what we've seen over the last couple months as prices have just gone down and down and down, like ETH value, right, is that a lot of your mid-tier rarities end up moving closer to floor versus like ultra rare prices. And I think that's because when you look at your like mid-tier rarities, and again, like you can look up these rarities on Rarity Sniper, Rarity Tools. If you just type in like NFT rarities, there's a ton of different sites that are tracking this and updating rarities, as projects are revealed and whatnot. So there are cool ways to kind of like filter by rarity and say, oh, this is, this like brand new project just revealed. Here's like, a top 50 rarity out of a 10,000 piece
Mm-hmm.
collection that's selling for way less relative to the other 49 NFTs in that top 50. And if the project doesn't rug, it might end up being an interesting trade or an interesting buy. So I think rarities are important for that reason. And I think it's, like I said, it's one of those things that largely the NFT community has looked at and said, this matters, right? But again, the mid tiers, like, I think you got to be a little careful. There's quite a bit more of them than there are the ultra rares. And if you get in a scenario where you have to sell it for liquidity, that's where you get burned by traders, out there who are going to try to like catch a 10 or 15% capitulatory sell and then sell it for, maybe a little bit more plus that premium they're able to convert from the dip they get.
There's a couple of things I want to touch on here. One being WAGMI United and Linkstyle, which are two projects that you invested in that didn't have the zeitgeist, right? Like definitely picked up interest. People that were interested in it were super fucking hyped, like us two being two of them. So that I want to touch on here in a second because it didn't have that, pump essentially in what you're talking about there. But I also do want to, before we get there, touch on this rarity piece because personally, I sold an ape about a month ago, my like OG ape that I thought I was going to have forever. Not necessarily a rare ape, not necessarily like the traits themselves aren't rare. It was the combination of those traits. So for example, like if I go direct, it was the fact that it was all white plus the bubblegum plus the ears that were also pink. So it was like aesthetically pleasing, but not rare. And one thing I want to add to this conversation and get your thoughts on too is like how that cannot be botted, because that's a human subjective thing that you see that the bot can't see, essentially. Like the computer can't see that aesthetic value. But I know I'm rambling. Yeah. Let me know what you think about like.
No.
Yeah.
That's a great point, and that's something that I've started doing with Doodles actually. That buy that I had yesterday, I picked up the Doodle number 231, right, which is what I would call like as close as it gets to a monochrome or a mono doodle, right, where the color is all the same. So Doodle number 231, it's pretty much all yellow, and then the hair is pink, right? So it's very different than a lot of the other doodles who are working with 3, 4, 5 different colors. And it ends up being, like you said, way more aesthetically pleasing. And I think for your projects where they're newer and they're less proven, this will get you into a lot of trouble. Moonbirds has kind of gone through that with their latest merch release. So they have a product characteristic called nesting, which is where if you basically like stake or lock up your Moonbird for a certain amount of time, after that, 30, 60, 90-day period is released, you'll get some item. And the latest one, which took 60 days for somebody to reach, which is a lot of time, right? Especially in the crypto world. They gave like a fanny pack and some socks, some merch that people were not happy with. And we saw some like really funny FUD hit the crypto Twitter timeline. And you saw Moonbirds go from like 29 all the way down to 19. I think it's bounced back up over 20 here. But that's a good example of your kind of short-term flippers who are really pissed. They thought the silver nest was going to be something big. Maybe they thought it was going to go and break 30 there. It's a huge flop. They start fudding out the rest of the Moonbirds community, and everybody starts dumping them. And a lot of these aesthetic birds move more closer to like your 19, 20, 21 ETH marks where they're only 5, 10, 15% above floor. And these people get burned because they bought them at like double floor price or 50% above floor price. But Moonbirds is newer, right? They've only been around for 3-4 months. So there's a lot more question around like, hey, is this going to make it? What are these guys doing? But it seemed, I picked up a Moonbird 2 days ago, largely because towards the end of August, there's a big proof event, right? Where you think you might get some kind of good news and some hype and all these things, and look to kind of try to trade it higher there. But I bought like the floor bird of all floor birds. It's got like 0 trades. So, you'll be able to move it quick versus like buying something at 25% above floor and then being forced to try to sell it at 25% above floor.
Yeah.
Right.
Okay.
But again, this is where you get in trouble with the aesthetics. To your point, with projects like BAYC, where pretty much everybody, especially those in the community, I mean, it's always going to have its haters, right? But I would say largely the crypto community looks at a BAYC and I think eventually a Doodles and says, hey, this isn't going away, right? Like, this community is strong. This wealth effect has been created. These people aren't going to give up all of their apes, you know, in order just to kind of cash out for ETH. So the aesthetic becomes more popular and more kind of like price demanding, because it no longer becomes a question of will apes go up or survive or whatnot. I want to be a part of it. It goes to, I want to be a part of it. Which ape do I like the most? Or which ape do I identify with the most? Or which one looks the most like me? So if you end up having an aesthetic, BAYC like you had, it becomes really powerful because so many other people look at that and they're like, oh man, that's an awesome one, right? It's unique for these aesthetic reasons, which is, you know, what I'm trying to do with some of the doodles. I like the mono doodles. I think they'll appeal to a lot of people.
Yeah, I pulled up 231 on the screen so people got a chance to look at that. But you keep mentioning Doodles alongside Bored Ape Yacht Club here. Why is Doodles to you the like either comparison level or at least come up to being one of those like top blue chips, as opposed to, I don't know, I throw out anything, VFriends or any of these like Clone X's that are coming out.
Yeah.
Why Doodles being in that comparison?
I think, alongside a lot of the kind of parallels that it has to Bored Ape, things like celebrity buy-in, things like crypto community buy-in, right? Like, Doodles, in the same way as BAYC, has kind of been through the ups and the downs, right? They've been around long enough where you can then look at, say, like the top 50 or top 100 rarity and get a price history to it. Whereas Moonbirds has only been around for 3 or 4 months, and during the dump we had in June, you could get a crazy high rarity for like 30 or 40 ETH, right? Which sounds like a lot, but if ETH's at $800, you know, you're grabbing that for 25K when everybody else historically has paid 100K or 200K or 300K for these ultra rares. Well, Doodles has already gone through that process, right? It's already gone through a lot of the FUD. It's already gone through like a lot of this pricing history where it becomes a lot easier for folks, in my opinion, to look at a Doodles or look at a BAYC or look at an MAYC and say, we've based it like a 15 or a 16 or a 17 ETH floor on MAYC so many times that I'm going to buy here, right? Like, historically, same with BTC basing at 20, right? And I'm sure it will continue to test these low 20 numbers, but the more it does that, the more comfortable people get buying there. Newer projects, it's a bit harder. So I think time is very, very important in the NFT world. It shows you that like these guys can exist past just the initial or the second hype cycle. You kind of have like the reveal hype with NFTs, and then things dump and they kind of settle, and then you have like the roadmap hype and hey, these are the plans, and then things kind of dump and settle a little bit, and then they actually have to go out and execute, right? And Yuga's obviously done that. Doodles has done that in a major way with all their new announcements. I mean, Pharrell, one of the largest artists and producers in the world, is the chief brand officer for an NFT PFP project, right? It's like a great parallel to Jimmy Fallon talking with one of his guests about like which Bored Apes they own, or Madonna tweeting recently like, I wanted this ape and I didn't get it and now I'm pissed. Like, in what, like, rewind 2 years ago or CryptoKitties time, like what world are we living in? This is like the Bitcoin shill you got in 2014 that like big banks are going to be buying and custody. Like, what are you talking about, man? Like, Madonna doesn't give a shit about Bored Apes, and here she is tweeting about it, right? So Doodles is not yet at the Yuga level. Yuga has been able to create more of a wealth effect for their community. Their mint price was super low, and the floor price now is super high, and that is incredibly powerful. You know, folks like you had two apes. You can sell one, and like I said at the beginning of the show, kind of reinvest those profits elsewhere, right? Or take some out to the bank that then is going to give you that much more foundation to not sell the ape you have currently,
Yeah.
right? Which only further improves the supply and demand effects there.
I love that. I love that. And there is a question to be asked of whether Doodles, in that run up, right, can another project get to that level where I don't remember what Doodles mint price was, but I'm assuming when you zoom out and you say maybe Doodles gets to 100, it looks a little bit like the Bored Ape price, right? Like that, it would look essentially like that. Can it get there? There's a lot of different things that, we could unpack there. We're coming up to the end of the episode. Man. Yeah, there's a lot of different pieces here. Let's touch on WAGMI and Linksdow, because I think there is this idea that they can really have some really awesome beneficial aspects in IRL, in like real life, where you see the crossover effect, where a lot of what's happening right now, it's either in the metaverse or it stays on Discord. It never transitions, other than like maybe at 1 or 2 events per year, to having any type of effect in the real world. Whereas Linksdow and WAGMI have come out the gates and are like either planning on doing that relatively shortly with Linksdow. I don't know where they're at with buying the club essentially.
Right.
And WAGMI, who I think has a great idea in buying that English football club and managing it and having some, utility for holders. Is the plan there to like, should people that buy that NFT expect to never have the type of like 20 ETH run up? Like, do the mechanics just not work for a project like that? Or I thought it would have been way more, of a slam dunk than it has been essentially. So tell me what your thoughts are with those two projects and why they haven't had like a 1 or 2 ETH or 3 ETH rip.
Yeah, I think those two, Doodles even, and then some of your more like kind of like fine art NFTs, as I'd call them, the newer ones, all now are getting kind of grouped into this new basket of like NFTs that are and communities that are executing on their goals in major ways, right? LinksDAO is a golf focused NFT and DAO that is basically using funds that it has raised and will continue to hopefully grow through their NFT volume and project to buy a legit golf course somewhere in the US, like probably on the East Coast. That's where all the founders are based. And, create this like Web3 country club around a golf course that works for the community, because community members naturally are golf fanatics and they like golf. And, you can kind of combine that with crypto and the digital aspects. And now you have this really cool kind of like self-fulfilling community that creates all this value. Same with WAGMI. In this case, it's the soccer team. Doodles is trying to do it by bridging the gap between like crypto natives and non-crypto natives. They're trying to extend the Doodles brand to your NFT folks who aren't necessarily crypto native, but find the concept of NFTs and the freedom around like art or music or this kind of new way to be creative and actually get paid for it. And you're also seeing some really cool things with famous artists like Tristan Eaton has his Gemma collection that's been out for a while. Michael Reeder is another one that I like, another artist I like, who came out with Cyber Bandits. And all 5 of these, even Doodles, right? Like you would think, okay, if it's the number 2, number 3 NFT project now, like how is the floor still at 10? And I think all of this is largely just a function of the broader crypto market. And this kind of goes back to what we were talking about before, and why I think as NFTs continue to stay an important piece of the crypto market, that you have to be tuned in to the larger crypto market as a whole. If you mint WAGMI for 0.38, right, when ETH is at 1,600, and you're only messing with a couple $100 or a couple $1,000 here, and ETH goes back to 1,200 or 1,300, and WAGMI goes from 0.38 to 0.28, like you start to get in a scenario where you can no longer buy new NFTs, right? And maybe you dump it for a loss and move on. Whereas I don't think the strategy for most people in NFTs right now should be finding that quick flip, because again, the broader market conditions just aren't there for a WAGMI to come out and go to 1 ETH and then go to 2 ETH, right? Like people just don't have the profits and don't have the funds right now to be trying to catch like WAGMI at 3 ETH and sell it for 30. Like the amount of people that have to come in and buy WAGMI all the way from a floor price of 3 ETH to 30 ETH is tremendous. They have to have a large amount of dispensable income to speculate with or join the community with, right? Whatever their goals may be. And you're just not going to get that. So with all 5 of those projects, Doodles included, Cyber Bandits, Gemma, WAGMI, LinkSDAO, I look at this as almost kind of the way that you look at some popular ICOs coming out of the ICO wave in saying, okay, yes, I can no longer, send some ETH to some random fucking ETH address and 2 weeks later turn it into 10x more ETH. But I know that so-and-so ICO has a ton of money in the bank and they've already executed on all this and they have a very compelling roadmap. And while, everybody right now is kind of licking their wounds and not necessarily caring too much about being at a country club in upstate New York or Florida or wherever the hell it is because they can't even afford a plane ticket to get there in the first place, I'm still buying it here, and I might even buy more on the way down because I think over the next year or 2 or 3 years, they're going to execute. And, it becomes a different model than what you've seen with NFTs, where all historically people have seen is like, you mint, it goes up from the mint price, it settles for a little bit, but there's really no kind of like good chance to jump in, and then it pumps to the moon, right? Yeah. Like that day is over.
I think there's an argument to be made even with Bored Ape Yacht Club of like, what other utility can they drop at this point? Like they hit the mutants hard. They hit ApeCoin hard. They hit other deeds hard. Like what else comes out? And I'm going to look like an ass for having this like on the internet, but like, it feels like they just
right at the bottom.
It feels like they just dropped everything that is of worth value. That's not going to potentially dilute the community in the future. Like the crypto community and the NFT community, and I've seen this happen in the metaverse with projects like Crypto Voxels, where like we don't want that extra dilution of our product. You know what I mean? Like I just bought you guys. You guys are gonna add another 10,000 supply piece here. Like, so I think it's definitely an interesting route that Bored Ape has to like add additional utility. But I agree with the overall sentiment that like that time of like flipping for nothing and on a roadmap looks a lot like the ICO phase, and we're definitely out of that time frame as well.
Yeah, sure. So. Yeah, I mean, I can give you my my bullish Yuga ecosystem.
Oh shit!
If you want it,
dude. That's why I had you on.
We can finish the episode here. I mean,
yeah.
It's a very good point, right? Like Yuga's not in a position where they can come out with like Robot Ape Yacht Club and Cat Ape Yacht Club and just dilute everything to zero, right? Like that's not what their goals are, nor is that a reasonable route to take. However, with the current setup between the Kennel Club, Mutant, and then the Ape, you basically have like 3 levels of public tradable assets that act as kind of tickets into this new other side ecosystem, right? Maybe those become characters in the game. Maybe you can use a Bored Ape and the dog, who knows, right? But those interacting with quotas and resources and land, all of which is powered by, say, an ApeCoin, could potentially, with enough buy-in from the current community and future community members, create this really awesome micro ecosystem where everybody is, believe it or not, like continuously rewarded as they continue to play the game, right? This kind of like play to earn function that we heard so much about that now has all of a sudden disappeared, and get rewarded as new entrants come in and play the game, right? So imagine you can travel to different land as your Mutant Ape character and pay the Coda ApeCoin in order to mine Bubonium that then you can use to like create some new weapon and sell that weapon back to some landowner who has a coda and wants to duel his coda with another coda, and whoever wins gets more ApeCoin, right? And you have these landowners who, you have a rare resource here with an environment and the sediment here that's super high, meaning that more and more people are going to want to come and pay you ApeCoin for you to use their. And again, this is all speculation. I have no idea if this is actually how it works, right? But this is just like one way to kind of play out the ecosystem. More and more Yuga holders come to this piece of land to mine bubonium, right, in order to then craft it and sell it. And eventually, people do it, and then, now there's a lot of these weapons out there, so the price kind of falls. But this landowner with this coda, maybe, in order for the coda to mine, you need a coda pickaxe, right? Maybe they have like a rugged pickaxe, and there's some way to like turn that into a fully forged pickaxe, but then you need a new resource, right? And ApeCoin kind of ties all this together, right? In order to maybe get discounts at the shop, you have to stake ApeCoin, right? But when you stake ApeCoin, you also get a staking reward, right? Which kind of gives you more ApeCoin, and as long as it's not too inflationary, your budget of ApeCoin that you can then kind of spend on cheap resources or cheap objects or cheap artifacts continues to go up. And what you have is this like really unique, complex, almost like gameable ecosystem that evolves, and as Yuga points out, should be able to be crafted and created in a unique way by the community members. You have this ecosystem growing all in itself, rewarding each other via inflation rewards or whatever the case may be, and it becomes something that's really compelling to other people who want to have a good time in the space, and they want to make money, and can do so kind of via this game. So I know that was a little bit all over there, but I think, like, looking back on it, on Doodles, who's trying to who's going to kind of try to like sell traits and merch, it seems, in order to reward holders, and Yuga to try to reward their holders by having certain actions in the game. Like, I think we're going to look back on this time and be like, oh my God, like I should have just picked up a Doodle for 10 ETH, or I should have just bought like an MAYC for 16, because the plans were there. It was just a matter of them kind of executing.
Yeah, we're deep down the rabbit hole, and we're sitting at about an hour and 20 minutes, which is definitely one of the longest podcasts I've had. We're planning on bringing back Mike every quarter, maybe even like every month. That would be awesome, just to get these continuous updates. Man, I like your take on the industry. One of the pieces you touched on briefly for like 0.5 seconds was that play to earn does not exist as it did maybe even 4 or 5 months ago. That seems to have been like, I think, along with Axie Infinity, who is carrying that flag, and then they just like bit the dust, like that term seems to have now taken on like some type of negative connotation. I'm interested to see, like, in this gaming mindset that you just mentioned, right? Like Doodle, we could pick up a Doodles for 10 ETH. Like, that is still expensive for the majority of the world, like,
sure.
How do you mesh these ecosystem plays that you're mentioning about growing, even like a other side, with trying to like bring in people just to play or just to like get in with $10? Like, how do you see that kind of playing out? How does Doodles, reach mass market when the floor price is at 10 ETH?
Yeah, that's the hardest question, right? And that's kind of the biggest question mark that people have when they really sit down and think about, like, okay, how does other side go from 5,000 or 10,000 or 15,000 like crypto natives playing the game to 25, 50, 100, 200 millions of people playing this game? And I think if we knew exactly how it was going to happen, then it would be kind of one of those things where the price would reflect that. But because we don't know exactly how they're going to pull it off, and because of Yuga and Doodles, and I'm sure many other communities are kind of keeping their plan for execution tight to the chest, it gives you like less certainty and more speculation. And that's just how the crypto market works in a lot of ways. Like, you could even look at layer twos, right? These various bridges that are out there, be it on Ethereum or bridges to other chains, and each one largely kind of has the same pitch. and nobody really knows like what is the biz dev team doing to execute. And every once in a while, you get little hints as to, you know, like Matic has done a good job of this, of saying like we're in Disney's incubator and we're, you know, creating this multi-$100 million investment fund, right? You get these little hints as to like, hey, this is how they're going to be the main layer 2 on Ethereum, right? They're going to go, you know, do this, do that, right? And it's like, it's hard for me to kind of sit here and exactly lay it out, and versus like kind of just thinking about it from like a probability standpoint to say like, okay, Yuga has executed on everything up to this point. Literally the biggest complaints they get are like merch or like shipping times or things like this, whereas other projects are screwing up drops or like can't figure out the reveals, or their Discord communities are a mess, right? Like the probability there is obviously a lot lower that they kind of like pull off this execution thing.
I do see the irony, having been that user myself, of complaining about some type of shipping times, but I do see the irony of that, right? About how all that wealth creation that they made, and yet we're still not happy, and that probably goes back to human nature and all these things. But I do want to give a one quick last shout out to the chat that has been listening this entire time. Again, we're running up on an hour and a half, so I want to let you out of here, Mike. But Dead Polaroid is saying Avagachi is killing it. Y'all do know Avagachi, and he also said, or he or she also said lending, which I think might be an answer to that question as well, right? Like somebody might want to get in for, you know, one ape coin. They could rent out my ape or whatever to play the game for an hour or what. That sounds really convoluted now that I say it out loud, but it looks something like that with lending. I could definitely see that being an answer, but go ahead.
Yeah, I mean, like if you can borrow a cute little Coda and a Coda pickaxe and play the game for 4 hours and come out with more ApeCoin than what it cost to borrow.
That's fair.
Becomes pretty, pretty satisfying over time, especially if the game's actually fun.
Gotcha. Yeah. That's a very important piece there. We could get into a whole nother conversation on NFT games. Me and you both are gamers ourselves, and I think that is a good discussion to have maybe the next time we have you on. One last shout out here to the chat and those of you that have been listening at home on audio or afterwards here on YouTube. So thank you guys so much for tuning in today. Orlando, mahalo, my brother, for coming by. Good to see you again. Mike, do you have any last thoughts or anything we didn't touch? Also drop the links to where people can find you.
I would just say that, you know, if you're still hanging around, you're still listening to content, you're doing what you're supposed to, right? You're surviving, just like we were saying. I feel much better about the crypto markets now than I did 1 or 2 months ago, and things are really starting to kind of look up, right? Like it does really feel like a conceivable we're all going to make it moment here as the market starts to settle and sentiment starts to improve and people start to kind of return to this awesome world that we find ourselves in. But I'm always talking crypto, always kind of tweeting my thoughts out, whether they're sober or intoxicated, on Twitter. You can follow me at that Finch guy. That's pretty much where I exist on all social medias as far as handles go. But yeah, man, this was great. Looking forward to doing it again.
Yeah, Mike Finch from Parada Capital and Purveyor of Fine Liqueurs, of course. There, he has the drinks lined up. I will be talking to you soon, man, about maybe potentially getting another sip of that Don Julio. We'll have a good time.
No doubt.
Thank you so much, guys. Appreciate it. This was the Nifty Q Show. We will be here next week. Of course, we're here every week interviewing founders, leaders, and builders in the Web3 industry, NFT space as well. So this was Mike Finch. Mike, you're the man. I'll see you next time.
Peace.